Right then, it is Tuesday, the 13th of January. We're going to get into today's moves and today's trades. Two losers, two different models. Fairly relatively managed losses. You know, S&P loss was in line with the 8 o'clock break and retest model, 43 pips and 63.90 loss. So very, very controlled loss under the plan and risk management there. And then the second trade was following the previous daily high, previous daily low model. Basically, it played out a bit more in a higher time frame, and I wanted to get in on that, but ended up trimming my stop and just closing it, simply because I already took a loss, and price just wasn't moving the way I was wanting it to after entering, and we're gonna get into it. So it's the chart we're looking at. So in terms of the higher time frame, let's look at that first. So on the S&P, we're already at all-time highs, and then on the NASDAQ, we're not quite at all-time highs, but we had this high over here, and I'm thinking that I was thinking that was going to be the next draw on liquidity, but I didn't place the trade on the NASDAQ. So what else was I looking for here? We're going to take this fib off here. So we marked out 8 to 8.15 candle come across there, and we also marked it out here. I understand it looks a bit busy at the moment on the chart. Pretty much what I was looking for was the break and retest to play out. We pushed up from, what news was it today? CPI, and got to move up gradually traded back into the midpoint, and the first trade I was looking to go long here, and just target fixed like 3 to 1 with the stop. How many pips? 979, 66, so 4 points, 4 handles down, and we lost it. It's just part of the model. Sometimes it happens. So I'm not mad about this one. It was very much in line with the model, and some days you just don't win it. So I'm happier with these losses than I was with the losses that I took last Friday, just because these ones I was following the model, and it just didn't play out. So what I was looking for once we got into the trade, so we had this imbalance on the 1 minute. I was basically looking for that to get filled after we pulled back down, and then we go and take the data high after this volume imbalance here was filled around this midpoint. I was putting a little bit higher just because I was waiting to see the reaction off this midpoint. We came down here, and then price moved up, and then came down again further. So I was looking at getting in around here, but I just wanted to see the reaction, and then we pushed up, got this candle closure above the 8.15 minute candle, and I went long here, stop 5 points or 4 points, and we targeted, where were we at, 70 for 83, so we're targeting 13 points on the NASDAQ, and we just got stopped out. So why did that happen? What did I identify beforehand? Straight away we got two factors that could have caused bearish price action. Firstly being, sweet previous daily high, which is on the S&P, the all-time high. And then we got a reaction off that. We have this imbalance down here from yesterday's AM session. So that's an immediate draw as well. As you can see, price has traded down into that. And I don't know, I was thinking maybe we could go for previous daily low, but it just didn't seem massively viable. It seemed more logical that this would be the target, this imbalance here. So in terms of what I did after that, I regrouped for a few minutes. You can see that trade, I was stopped out at 9:59, 10 o'clock. So I was thinking, maybe we get a 10 o'clock reversal. Price gradually trades down. And what are we looking for with the other model? Well, if we just take the drawings off the chart, on a 30-minute, even on a 15-minute, it was a 30-minute inverse, which is why I went in, because it was a bit more of a higher time frame confluence. We got the inverse fair value gap here, price trades down, breaks structure, and from there I was looking for a fair value gap. Here's the fair value gap. Put the drawings back on so we can mark that in blue. Now, an ideal entry would have been in the retracement, but I just wasn't looking at the chart. So, this candle wicked up, and on the 5-minute pulled down and then back up again into this, and I went short here to target previous daily low. So the entry wasn't ideal for this model, but my phone's buzzing like crazy. We set the stop above the inverse fair value gap as per the model. And because I'd already taken a loss today, this was a smaller trade. So if I just get the broker statement up, actually, just have a look, see how many lots this was. So this was 5 lots. So we were risking £91 to make 164. So it's not great, but it is still 1.8 to 1. If we were to get this ideal entry, it would be about, what would it be? It'd be 180 for 75. So it's just over a 2 to 1, around 2.4. So what did I do? What was I looking at whilst I was in this trade? Basically, because I'd already taken the loss, I wanted to be a bit more risk averse, and I originally trimmed the stop just below the inverse and above the 815 candle. And then as price made this push down here, you see this here, I then trimmed again down to about, I think it was like 28 quid or so. Let's put 5 lots on. So yes, it's about 25 quid, just above this high. And I was also thinking on the 15-minute chart, we've got this high here. There is still a bit of the imbalance, but I didn't want to risk price coming all the way back up to this trim. But nonetheless, if I had left the stop in line with the model, we would be just running in profit at the moment. We'd be running or floating £8 profit. So it's not great at the moment. But it's interesting to see that I had an alternative plan from the initial model failing. Maybe it wouldn't be the best, but say for example we had the trade running here. If we do that with the 5 lots, we would have come all the way up here. So we would have been in minus £65 drawdown all the way back down into 48 and back to 22. So I wouldn't be surprised if we see this come lower overnight, but I don't really want to be holding that. I'd rather just call it a day, cut my losses, and just look for another setup. It just makes more sense to do that. I feel more comfortable doing that than holding overnight. So one of the reasons why I decided to trim the stop was because of, obviously, as I mentioned before, we had this buy side liquidity up here, this high. And if we look at the range from basically the move from the London session all the way to the CPI highs on the Fibonacci, so we draw that out like that. So the low after the London session, just flip that. Or was it the 815? Yeah, so from the 815 candle, price comes down from that CPI high, taps the optimal trade entry, and the 0.5 standard deviations lines up with that high. So that is one of the reasons why I was a bit more cautious, and I didn't really want to hold the other position for too long. I was a bit more conscious about the management of the stop. So, you know, we took two losses today, but these ones were much more controlled um, than Friday. I wasn't just getting in to chase profits. It was more just like, right, so we've got the other model here. There's a possibility, execute it, but just with a bit more risk management. So really, it's as simple as that. Puts me down 92 on the week, £92.16. And on the month, that puts me down like 170, I think, 177. So yeah, it's one of them. We can make this back very, very easily. We just have to remain disciplined and continue to implement the model, both of them. Obviously, this 8 a.m. break and retest candle is, you know, the more shorter term. It's like the easy points to pick rather than the full move. As you can see, like if we were to take this move, it would be 96959 all the way down to 6911. So that's like 400 points if that was on the Nasdaq, whereas it's like 40 points here. So yeah, I mean, it is one of those. It's a lot more. I would be opening myself to much more risk if I was to take that. So for example, you know, the setup didn't really. I mean, yeah, we got the inverse fair value gap here. We got the break structure here. We go onto the 15-minute time frame. The ideal entry would be, whoops, let's pop that in there. Where would the inverse be? So we would put the stop just above the inverse like that. Target previous daily low, 5 to 1. That would have been absolutely ripped on the, at the end, past the end of the session. So the Nasdaq was definitely more bullish today, whereas the S&P wasn't so much. And I just think overall the lack of correlation between the two of them was a bit deceiving. And yeah, like I say, I'm not mad about these ones. These are absolutely fine losses to take. They're managed. So with that being said, I think we got PPI tomorrow. Core retail sales and PPI. Just conscious that I'm dehydrated right now. Hold on. There we go, much better. And then unemployment as usual on Thursday. So we'll have another look Thursday, Friday, and then Wednesday, Thursday, sorry, and then yeah, I'm not going to trade Friday this week purely because of last week, and yeah, we're just going to leave that out. So overall, I think the total pips today lost was, let's put it on today, 76 plus 43, you do the maths, 120, I believe. 76 plus 43 equals 119. So 119 pips down today. And yeah, it's all part of it. Either way, it was much better managed than it was on Friday. So that is an improvement, at least. One thing I was thinking about in the car ride home, when I was driving home, was, you know, if I was to imagine I was trading with a bigger account and say, for example, the stop loss on this first trade, yeah, so I went in with 20 lots on this, which seems like a lot, but it was only 1.05% of the account. You know, and that's a £64 stop loss. Can you imagine if I went in with, you know, say 1,000 lots, yeah, and that's a 3.2 grand stop with a 9.6k take profit. Am I realistically gonna then look for the other trade in the day? Probably not. Do you know what I mean? So I'm gonna, implement that going forward, what I'm gonna do, I'll just be imagining that I'm trading with a much bigger account, and would I place that bet that price is going to do that? And also, if it doesn't do that, would I place another bet that price is going to do another thing with that same amount? Would I then risk, say for example, two stop losses, 6K on a day? Like today, it was only £92. But if it was 6K, maybe, well, the psychology would probably be very different there because, 6 grand of personal capital, that could cover maybe 3 months of salary. So it's an interesting perspective to look at. So yeah, bit of a tangent, but just something that I noted on the way home. So like I say, going forward into the rest of the week, we will have another look, see what price does by the end of today, reevaluate. But I do think ultimately on the S&P, we do have this high here. That is the next high that I want to see taken. Also looking at yesterday's daily candle, it seemed quite bullish. It was undecided, but you got all this selling pressure here, and price closed up here. So I wouldn't be surprised if we end up completely filling this imbalance, getting an inverse fair value gap or something, back the other way, and then price continues upwards towards this draw for the remainder of the week. If we look at, well, that was Monday's price action, and then the Tuesday candle will ultimately start to give us more of a weekly profile to determine our bias. So it is just one of those, just a bit of patience, and just keep it up, keep going, and yeah, we'll see. With that in mind, trade smart, trade safe, don't gamble, and yeah, catch you in a bit.